Hey everybody, welcome to the garden. I hope you're having a great day. Shout out to the lemon and lime lovers and everybody in between. It's time for a market recap. And we're just going to hop right on into the charts because it's been active, okay? It's been active. Now, we're just going to take a quick look at the dollar. And, it is the weekend, so dollar is not, active currently today. But it's good to look at it now, especially with the events unfolding, namely what's going on with Iran and Israel. We'll touch on that a little bit when we go into Bitcoin, but we can see that starting to be reflected in the dollar's chart. So last time we looked at dollar, I had said, this is likely going to lead towards a consolidation that would ultimately lead towards more upside. Now, I do not know if it's going to get all the way up to the, 114s, 112, something like that, but it's definitely on the table. I am very confident that we're going to overtake the consolidation I have circled here. So that's about 107 plus, okay? So I have been looking for us to make a move back up to there. So far the dollar is generally following the path that we have painted for it. It has broken bullish out of this consolidation. Now, it did not do a consolidation that was as large as I expected. I thought it'd be a little bit more mature, but it did break, come back, hold up a higher low, and then have a nice blast off. A lot of that is a response to the rising in inflation, and then obviously the tensions rising in the Middle East. So on Monday, tomorrow, do I expect this to go higher? Yes, it's probably very likely to at least make a move back up towards 106 plus, to maybe, if it's a really hectic day, going up to 107. This is going to be very dependent on how things escalate from here. We've had a major escalation so far. Are we going to get a slowdown in that escalation between Iran and Israel and kind of let things simmer? Or are we going to keep taking steps higher and higher and higher? And if that's the case, we're very quickly going to see a move towards 107. Now, let's get over to the U.S. equity markets, and then we'll see how they've been responding. So, interestingly enough, the U.S. equity markets are pulling back. Now, this isn't wholly unexpected, and it is actually quite bullish for now. So I want to make that very clear. For now. Why is this bullish for now? So we do know that the Fed, per Jerome Powell, came out and they do plan to cut. Now, if you look at the history of how they cut, they almost never, actually I don't think they ever have, they don't really like to cut when the S&P is trading near the highs. So let's quickly look at the S&P real quick. Right, so here are the highs, right? So this is the all-time highs. Before the Fed is even going to think about truly cutting rates, they're going to want to see a pretty sizable pullback. I would say at least 10% from those highs and lower. So 10% minimum and lower. So minimum, we're going to probably see more downside over the next week or two. But as we get closer towards May, maybe the end of May, we may get more updates on what the Fed's thinking. And if we pulled back enough, I think it's going to really open up the door that they're going to pretty much confirm, yes, we're going to cut, maybe a quarter basis point or maybe even half a basis point if the war starts to get really, really extended, or I should say really hot. They may think to cut even deeper. But right now, I would say probably a quarter basis point. Looking at the technicals, though, what can we see? So far, we popped up, and then what did we do? We start kind of grinding a little bit lower, a little bit higher up here. Now, this isn't wholly bearish or anything. We did break out of here, out of this pennant structure, broke up, came back, and then we failed to hold the actual consolidation, and we were broken lower. So what does that mean? Usually that means you have a much larger a structure being built. It rarely leads to just a straight down like this. Usually you're going to have something more akin to this where it respects this auction here, okay? So you're having this consolidation here and then a pop-up from there, and then we'll look for a lower high, and we may end up getting something akin to like maybe a Head and Shoulders, or you're going to be getting, maybe if we have a more bullish sort of sentiment as this is happening, and getting more signs from the Fed that they're going to be really aggressive in cuts, you may end up getting a bullish consolidation that will eventually lead towards challenging the highs again over the next couple months or so. Okay, so this isn't the end of the world for the U.S. market, but it is a pullback that is necessary if we're going to start to cut rates. And the Dow, as of right now, I'm looking for it to get back on down towards around sub 37.7 going to 37.7 and lower, probably towards 37.5, and we should see some price interaction here. I would expect for price to react to this area to at least lead towards a lower high or to potentially lead towards a more bullish consolidation. Okay, and sorry about the background noise. You got some helicopter flying above my head. Okay, so watch out for price to come a little bit lower, down towards 37.5, 37.7, around there, and then we'll see what price action does there. Next is the S&P. S&P comparatively to the Dow hasn't pulled back as much, been a lot more stable, but I am looking for more downside. Ultimately, first place is going to be this auction here. Right, so we're going to be looking for this area here at around 5,000. So I do see us coming back down another 127 points over next week, getting to 5,000, and we should see some interaction there. It's very likely that will not lead towards some sort of major consolidation that will lead to more upside or anything like that. Okay, this is unlikely. It's more likely that will lead towards an interaction that will then lead towards a lower high and then making our way back down, coming all the way back towards 4,800. Okay, that's key. Once you get to 4,800, that's when for sure there's going to be a lot of demand, and you'll probably get a really good reaction from the Fed, giving clear signals that they are happy with this current pullback. Okay, so until we start getting towards 4,800 again, pretty much sub 5,000, I don't think the Fed's going to really be too keen on cutting rates, or at least signaling they're going to cut rates. Generally. Okay, next is NASDAQ. Similar to the S&P, pulled back even less, and that just kind of shows you how powerful tech has actually been. But this one also, same thing. We want to see this pullback, and this one's going to come back most likely back to its previous all-time high. So we'll have a pretty sizable move back down on the NASDAQ. But again, NASDAQ's been probably the most extended anyway. So this is going to probably have the most most elongated move down, which makes sense. This one also has been grinding higher, so this has had a much more bearish structure relative to like the Dow. So this one has a pretty clear sign that it's going to probably break this rising lows, and then we'll just see it kind of make its way down towards this area. And once you get towards this area here, again, this consolidation, this auction here, it's very likely you'll see some sort of price interaction from there. I would look for some sort of lower high to be built from this, where you pop up, okay, and then depending on what's going on, it may lead towards a much bigger consolidation, or if we get really bearish, we're going to go sub 16 and get back to like 15.9. But that's, in that scenario, that's very, very deep. That usually is going to imply that we're in a much bigger retracement, and potentially that might mean the war effort has grown substantially on both sides, which would be pretty unfortunate. Next is U.S. oil. Let's take a look at the oil price. So just like with dollar, I've been very bullish on oil. So if you've been around, you know, I've been bullish on oil. You have the Biden administration trying to keep the price down, but because of their incompetence, they really can't do that. They've refused to fill the strategic oil supply for the U.S., thinking that they can keep price down by not buying oil. Unfortunately, they're doing it when we're going into spring and summer times, and we have the war machine outside the U.S. ramping up, both in the Middle East and potentially in Russia. If the rumors are true, we're going to see a resurgence in the Russian move down into Ukraine going into later into the spring here and maybe early summers, which is going to hike the price of oil more. And then it's going to lead towards the U.S. not having strategic oil supply, and probably force them eventually to start buying oil at even a higher price, when their excuse of not buying it now is because it's too expensive and they don't want to raise the price. So that's the stupidity of the current leadership in America. And so we're probably going to see this over the next week or two go up back towards around 88 to 90. They'll try their best to pull it back down, but God forbid, if the war effort continues to expand out in the Middle East, that will fail, and you'll see this get back up towards 92, 94. And then eventually, as we get deeper into the summer, you're going to get more signs of the U.S. having to get more involved, and then they're going to have more oil on hand, and you'll start seeing them buy, and it's going to shoot the price like crazy, going up towards the hundreds again. So there's a good chance this year we're actually going to see oil at 100 or higher. So if you've been with me for a long time, you know I've been extremely bullish on oil. I've been warning about this scariest chart in the world, and it's everything fundamentally, all the variables around are really starting to line up with a extremely expensive oil price. So be careful out there, guys. So as our doodles are coming, I am looking for potentially more of a pullback, but after the events here on the weekend with Iran and Israel, we may not get the pullback back down towards this area 81. It may gap up. I'll have to see. There's no point in guessing. Either way, even if we pull back, it's very likely just structurally on a technical level. As long as we make a higher low from these lows down here, okay, we're very likely going to make a move back towards 90. Whether that happens this month, next month, or maybe sometime in June or July, it's irrelevant. It's very likely going to get towards at least 90 plus in this year, okay? All right, next, let's take a quick look at gold and silver. And man, gold has been nuts, okay? Gold's been crazy. Incredible move on gold. Again, been very bullish on gold as well. And just like with the dollar, I was looking for a bit more of a more mature consolidation here, but gold was like not having it. They were just like, let's go right on up. So it ultimately followed the bias, but it was very impulsive. We had a pretty nice pullback here going into the close. However, this was again before the events that took place during the weekend, so we may end up seeing gold recover really well off of this candle. This is a very powerful move. This is the sort of candle you will ultimately look for as a sign of reversal, but the context is not really on the side of that. We may get a technical reversal coming back down at least towards like 2240, but until we actually take out like something like this, we take out this consolidation, I'll be very skeptical of any major downside coming for gold. I just see every pullback as an opportunity to get on in. We are potentially looking at a $2,500 to maybe even a $3,000 gold sometime next year. Or if it gets really bad this year, maybe at the end of this year, which would be insane. So this is an incredible move. If we go up to the weekly real quick, just to take a quick look, I mean, we're clearly in price discovery. It's beautiful. This weekly candle had a really nice sell down, but this is not actually that bearish unless next week turns out to be overall bearish, right? So if we end up having a bearish candle like this on the weekly that's engulfing here, that's actually your sign that this is probably going to be at least the best case scenario if you're bullish, a major consolidation point where this is going to serve as the high for like a couple of weeks, maybe months, and then you'll get a consolidation. At worst, unless you're bearish, that will lead towards a top, a significant top that you're going to come and hold for a long time and probably revisit like 2000 before taking this out. So we'll have to wait and see how the next weekly candle closes. It's going to be really important, but I will say the context for gold to go up higher, all the variables outside of the chart is on its side to go higher. So we'll see how tomorrow plays out and ultimately how the week closes out. All right, next is silver. So silver, similar story to gold, but just like it's been the same story over and over and over, stunted. I mean, silver has not really shown as much impulsiveness, and obviously there's a lot of reasons for that, but it's pretty crazy because I was mentioning in the last recap I did, the silver chart is primed to explode, but there's like an artificial hold on this thing. I can't tell you exactly why. I can only speculate. Obviously, I'm leaning more towards production. There's just so much silver used in production that they need the price to be low for a lot of different products, especially the green energy stuff like solar panels. But I don't know. It's pretty incredible. Silver should be much higher, probably challenging or breaking its all-time highs by now, but it's not. And it's had a really nice pop up relative to gold. It's been very lackluster. But like I said before, if gold breaks up higher and higher, silver will too. It's gonna be at a much lower ratio. So, just be careful if you're super heavy on silver. I mean, I'm a big fan of silver. I think it's really useful. But man, it's not really returning great. If we look at the chart, just looking at it, weekly looks great. The structure broke bullish. You can see that on the daily as well. It's broke bullish. Break out the structure, make a higher low here. Now you have rising lows. Had an impulsive move, and just like gold had that top, that blow off candle. Now we'll see if this actually plays out as a blow off candle on Monday. Or if it's going to respond to what's going on with Iran and Israel, okay? And if any signs show that that's going to stay hot or get hotter over there, then I don't think you're going to really get much more downside, in the foreseeable future until we get signs of a kind of a chilling out period there. All right, so now let's go on over to Bitcoin. So we'll talk about Bitcoin. So quickly talking about like what's going on with Iran and Israel. So I'm not going to get political here, but you could obviously, if you've been listening, you obviously know I'm not a big fan of Biden. It's not out of loyalty to a party; it's just out of observance of his capabilities. And I do feel like a lot of things that are happening in the Middle East is just a failure of leadership on a lot of different parties. I think there's atrocities that have been happening on both sides, and it's very, very sad. It's not really much things I can say. The words don't really, the words can't really describe the horrors that are actually happening. But right now unfortunately, we're in this ladder of escalation, and I'm not seeing anyone come off of it. And this weekend, you had Iran directly attack Israel. Now, to the degree of the attack, as far as I know, most of the attack was rebutted by the Iron Dome. Obviously, some missiles have gotten through. I don't know if they have any major casualties or anything. I haven't really looked into it that heavily. But during that attack, Bitcoin had a pretty interesting reaction. Now, Bitcoin in and of itself has not reacted that much. So if we look at this, he had a nice pullback over the last 2 days, but it hasn't really been a crazy move, okay? 4%, closed down 4%, and then yesterday we closed down another 4.5%. So it was just just under a 10%, or maybe we rounded up a 10% move to the downside. So nothing too crazy. Today, trying to slow down. Look where we're slowing down here at 64,543, okay? So if you go back to my previous recap, this low, that line right there, is actually this weekly doji candle's low. And this low I highlighted as being a very important level. Now, what is this level? This level, to me, in my opinion, now you can disagree if you want, but if you can see price actions really respecting it, this level is implying the impulsiveness of the weekly chart. Okay, so if we have continued closures above this low wick, what it does, it implies that the character of the price action, the character of the structure that's being built is impulsive, and it's keeping its impulsive nature, okay? If we do start to have closures below that doji's low, then it's implying that the impulsiveness has waned, and we're likely going to see either a much bigger consolidation. When I say much bigger, I mean much bigger, weeks, months, or a deeper pullback that would likely lead towards 57 and then slightly lower going into the 55s. That would be more likely in this scenario, okay? But if we do close above on the weekly time frame, it implies that we're still in a rising play, okay? We're still in a rising play, and that you have near equal highs like this. This is going to have a more bullish character to it, a more bullish spirit to it. All right, you got to remember, the way I look at price action, now you can disagree with me if you want. I see it as a living thing. It's not perfect. I don't believe in this ghost of the machine where it's all controlled. I think things are controlled, but there are things that aren't controlled because there are things run by humans, and that's just about everything is run by humans, from the algos to anything. Someone with enough money can do anything they want, okay? That, in my opinion. And if you disagree with that, that's fine. That's my opinion. And I do believe that if we look at the supply of Bitcoin and we see the behavior of those with a lot of money, what are they doing? I am not seeing them run from the market. I'm seeing them jump in to the market, especially Bitcoin. I don't see the ETF flows slowing down. Now, I'm going to be very curious to see what's happening on Monday. So I may change my tune. When I see the ETF inflows, outflows, I may change my tune. But as of now, I have not seen much evidence for me to think that big money is running out of Bitcoin. It's actually the opposite. And you either have retail that got in just now and they're getting out, or that they haven't even gotten in yet. Okay, so I am very interested to see what's going to happen Monday in regards to the data for the ETF inflows. But as of right now, the red line here is this low here on the weekly. As you can see, we're trading right at it right now. So this is going to be the battle. This is what has been the battle for the past couple of days. And if we do end up closing above this on the weekly, it doesn't mean we're going to fly up to 80,000 next week. I'm not saying that, but it does imply that we're still in an impulsive structure. That doesn't mean next week, where let's just say next week we trade under it and we close under it. That again will imply that the impulsiveness is gone. So this doesn't mean like this is the only week it has to prove. It has to continuously close above if we're going to keep the impulsive nature of this move we've had. Okay? Eventually, we're going to lose our impulsiveness. So whether it's going to be here or whether it's going to be higher, who knows? All right, it's not really relevant. Now, in regards to the swing trade service, so if you've been in the Lemon Garden, whether you're a free member or not, I'm sure you got a lot of pings over the weekend, but we had a really nice pullback in the altcoins. Okay, so let's talk about altcoins real quick. Having a decent day today, but we had 2 days of like 20+% pullback, so it was really, I mean, I thought it was great. Finally, a great opportunity. Now, we did let go of some long positions. Obviously, you can see we're in a bunch more. We're still in a ton more of longs. We have all these longs here. Most of these are in, deep profit, or they're just completely risk-free trades. Some of them are slightly in the red because we've been building them as we've been pulling back here. But a lot of altcoin positions we were in, we closed out off of the drop. Some were stopped out and break even after taking a lot of profits. Some we just closed out. For a quick visual right over here. So this is everything we closed yesterday. Okay, so a lot of these swings we closed yesterday. It was a really interesting day. There was a lot of fear in the market. I bought a lot yesterday of a couple things, added on to some positions, closed some positions, took some profits. So if you're interested in any of the services, namely the swing trade service, you can find the details to that down in the Discord here. If you haven't joined the Discord, you'll find the link below in the description. It's totally free to be in the Discord, but to be in the swing trade service, you have to go to premium service links here, and you'll be able to get a lot of details on the pricing and anything that you're interested in regards to other services like the day trade room or maybe a tutoring sessions or anything like that. Okay, so if you are interested in anything I provide, you'll find the details there. But all I will say is, whether you're in the swing trade service or not, my advice is trade slowly. Okay, if you're swing trading, trade slowly. Don't use leverage. And if you are forced to use leverage for whatever reason, whether it's a problem with you, I don't know, at least go super low leverage. I mean, maybe 2x, 3x, but people on 3x got liquidated yesterday. So there are days where no matter what leverage you're using, you're going to get punished. So I would recommend don't use leverage. If you take things slow, you do a high win, very a consistent strategy, whatever that may be. Stick to your rules, minimum mistakes. You'll be fine. Okay, you'll be fine. I employ a DCA sort of strategy in the swing trades. It's a very consistent way. It's not the fastest way to make money, but it's the most consistent way I know. And everyone who's stuck with it is making money on a consistent basis. Okay, slow growth, steady growth, and you'll lead to huge opportunities. All right, guys, that's it. Everyone have a great day. And again, if you are interested in any of my services, or you want to just join the Discord, you'll find the link down below. Also, the Patreon's down there as well. And I want you all to remember this always: be patient, be vigilant, and be nimble. I love you guys. Take care. Goodbye.